Hello, my name is Danny Scelza, and I am a junior in the Applied Investment Management program here at Marquette, covering the real estate sector. And today I will be pitching CareTrust Real Estate Investment Trust with a price target of $25.38, representing 28.6% upside. CareTrust is a self-administered real estate investment company that engages in the ownership, acquisition, and leasing of healthcare properties. These properties include mostly skilled nursing facilities, which make up 70.6% of their total rental income, as well as multi-service campuses, which make up 16.3% of revenue, and senior housing, which makes up 13.1% of revenue. Their 224 properties are leased to 22 different operators located in 28 states, with their highest concentration of properties located in California, 25%, and Texas, 20%. Current trading price is $19.74, and CareTrust currently pays a dividend yield of 5.6%. CareTrust's skilled nursing focused portfolio is relatively small, but is geographically diverse and has been officially operating its properties since inception and has collected 100% of its rents the past 2 years, with their triple net leased assets generating a total yield of 9.7% in 2021. CareTrust tenants also have a tremendous track record, as the tenants produce a total EBITDAR coverage ratio of 2.7 times in 2021. This was led by its top tenant, the Ensign Group, who produced an EBITDAR coverage ratio of 4.39 times during that time and is currently operating 33% of CareTrust total properties. Management has also consistently increased its dividend even throughout the pandemic and turmoil surrounding the healthcare industry at an annualized rate of 9.4%. The skilled nursing industry is highly fragmented, and CareTrust is well positioned in terms of liquidity to be opportunistic in this fragmented market as they continue to acquire and consolidate more properties. It is recommended that CareTrust be added to the AIM Small Cap Fund with a price target of $25.38, representing 28.6% upside. As seniors account for a higher percentage of the aging baby boom population, the demand for skilled nursing facilities is poised to increase to meet the growing need for post-acute care, as 21.2% of the current population is between the ages of 60 and 77 years old. Nursing home care facility expenditures are projected to grow at a CAGR of 5.2%, growing to $266 billion in 2028. As the supply-demand gap reduces, CareTrust will face low competition as many major healthcare REITs are focusing on other healthcare segments. They are in position to take advantage of the current seller's market, as proceeds from the sale of real estate will go towards investments in their bread and butter category of skilled nursing facilities. Initial investment yields over the past 5 years have been consistently strong, with an average yield of 8.7%. On top of a strong tenant track record, only 8.1% of CareTrust total rental income is maturing through their contractual leases before 2030. With consistent rental income growth since 2013, CareTrust has secure rental income growth for the next coming years as well, with effective maximum rental increases based on the lesser of the CPI index, or 2.5% for almost all their properties. For Treasury inflation protected securities, which is based off the CPI inflation index, the current 5-year break-even rate is 3.57%, indicating 2.5% rental increases are a fair assumption for the next 3 to 4 years. With rental rate increases and growing operations through acquisitions and re-tenanting current properties, CareTrust rental income stream is projected to grow at a 5-year CAGR of 6.5%. With current market conditions and heavy inflation, having contractual rates based on the CPI index provides a great hedge investment. After years of waiting for the right opportunity to move into the behavioral health industry, management has announced its portfolio expansion into the behavioral health space for 2022. CareTrust is working with Landmark Recovery, a proven operator and leader in the behavioral health space, to occupy these new properties. The growing acceptance of mental health conditions and other disorders will continue to bolster demand for facilities across the country. Funding of $4.2 billion from the American Rescue Plan is expected to aid industry establishments such as CareTrust. With industry revenue estimated to increase at an annualized rate of 3.1%, management forecasts better coverage ratios and initial yields of around 9%, which falls in line with their current portfolio. To reach an intrinsic value for CareTrust, a 5-year adjusted funds from operation valuation model was created. Using a terminal growth rate of 1.25% and a WACC of 6.82%, an intrinsic value of $27.10 was reached. A dividend discount model was also created using a discount rate of 8.59% and an average 5-year dividend growth rate of 6.4%, resulting in an intrinsic value of $23.08. Additionally, a price to funds from operation multiple valuation was calculated using a peer weighted average multiple of 14.6 times, resulting in a relative value of $20.52. Additionally, an enterprise value to EBITDA multiple was calculated using a peer weighted average multiple of 20.0 times, resulting in a relative value of $22.48. By weighting these models 65%, 15%, 10%, and 10% respectively, a price target of $25.38 was reached, representing 28.6% upside. One of the risks attributed to CareTrust are potential Medicare and Medicaid cuts. Tenants rely on reimbursements from Medicare to cover certain operational costs, and if reimbursement rates are less than expected, it could have a material impact on tenants' ability to cover rental obligations. Another risk associated with CareTrust is the skilled nursing labor. As the pandemic led to over 400,000 people leaving their job in the nursing care industry, tight labor in the skilled nursing facility industry has proven to be tough, as the employee-patient ratio is roughly 4 to 1, much higher than other healthcare segments. Another risk associated with CareTrust is their occupancy rates. Occupancy rates have still not recovered to pre-pandemic levels and has decreased 7.5% in 2021 and has remained flat quarter to quarter throughout 2021. Dave Sedgwick is the current CEO and president of CareTrust and has held this position since inception in 2013. Mr. Sedgwick has an extensive background in skilled nursing, previously serving as Ensign's Chief Human Capital Officer. Bill Wagner currently serves as the Chief Financial Officer for CareTrust and has held this position since 2013. Executive Chairman Greg Stapley brings a great deal of leadership and experience to the company, as he previously served as Ensign's Executive Vice President and also co-founded the Ensign Group.